Apple, AAPL, stock has been floating in the beyond about 14 days since our last article. Toward the finish of spring, Apple could climb its profit, yet financial backers might need to short its puts. In early trading on April 17, the price of AAPL stock is $164.16, which is very close to the price of $164.90 at the end of March. Income are expected out on May 4 for the organization's monetary Q2 period finishing Walk 31, so it's a good idea to survey the exchanges we examined. In such manner, short vendors have been bringing in cash, selling out of the cash puts and calls in front of the organization's May 4 financial Q2 profit finishing Walk 31. In fact, the short option plays I talked about in my previous article have already made a lot of money. We talked about shorting the $180 strike price calls that expire on April 28. The choice premium at the time was a quarter, and today it is exchanging for only 5 pennies, with 11 days left to lapse. To put it another way, investors have received 80% of the anticipated yield of 15 basis points or $0.25/$164.90. So financial backers have caught the greater part of that pay now and might need to turn the exchange over. At the time, the idea was that, assuming it could be performed monthly, this short play would generate an additional 1.85% of annualized income with 27 days to go. This is significant since AAPL's 0.57% profit yield, i.e., $0.94/$164.90, isn't just high. Additionally, as I mentioned in the April 2 article, Apple is likely to announce a dividend increase in conjunction with its fiscal Q2 earnings. Shorting the May 5 call options on a covered call basis now makes sense. That would entail buying back the calls on April 28 for 5 cents, and then shorting the $180 calls on May 5 because the investor's covered call basis is once again available. Thankfully, those calls are also currently trading at 25 cents. So the financial backer can now make 15 extra premise focuses for these calls which terminate in 18 days, i.e., $0.25/$164.16. If AAPL stock rises to the strike price on or before May 5, there is a chance of making almost a 10% unrealized capital gain because the $180 calls are 9.6% higher than today's spot price of $164.30. In fact, some investors might want to short the covered call contract's strike price of $177.50 for 44 cents. If done monthly for a year, that results in an immediate yield of 26.7 basis points, or approximately 3.2%. Also keep in mind that rolling over the original covered calls from April 28 will have nearly doubled the investor's income this month. Even more profits from shorting AAPL stock puts. The short put options strategy discussed in the April 2 article has already generated significant profits. For instance, we talked about selling short $147 strike price puts that expire on April 28 and are almost 10% below the spot price. The premium paid at the time was 70 cents, or 48 basis points per month, or again an annualized yield of 5.71%. These puts are currently trading at a price of just 8 cents per put option. Since investors have received almost 90% of the anticipated total yield, rolling over this trade probably makes sense. This entails reshorting a put with a longer expiration date and buying back the short put position at 8 cents. For instance, the $147 strike price puts, which have an expiration date of May 5, are available for 50 cents with a 10% downside protection from the current spot price. Even though this is a little less than the trade before it, it still gives you a monthly yield of 34 basis points and an annualized yield of 4.08%. However, keep in mind that we have doubled our short trades for the month, just as we did with the short calls. As a result, the total premium paid to the short put investor could exceed $1.12, 62 cents from the rollover trade and 50 cents from this trade, respectively. That amounts to an annualized yield of 8.2%, or a monthly yield of 68 basis points or $1.12/$164.30. That is significantly higher than Apple stock's current meager yield. The bottom line is that shorting out of the money puts and calls ahead of the company's earnings release on May 4 can yield significant profits for investors.